Welcome to Drill Down Earnings. Let's take a quick look at the latest results from Globalfoundries. I'm Cory Johnson, the Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology, and I think Globalfoundries is one of the most interesting ones because they're trying to create kind of a mini Taiwan semiconductor, mostly here in the U.S. The company based in Malta, New York, in upstate New York, near Albany. Although they're based in the Cayman Islands, part of their focus is we can make things here in the United States that they make everywhere in the world. So when we focus on those 50 most important companies, this one's so interesting to us, not because it's a beat or a miss, because Wall Street's obsessed with that kind of thing, but let's talk about what we actually got in the quarter. So $1.688 billion in revenues, gross margins of 24%, which is pretty good for these guys. Operating margins of 11.6%, not really fantastic. Operating margins have kind of been flat there for quite a while for Globalfoundries here. But we look a little bit beyond the headline numbers. Look, the 3% growth rate, the real headline number, not good. Hurt by phone sales. It's their biggest business and it's not going great for them. We'll dig into that some more in a second. And their guidance was weak. Guidance of $1.675 billion. That's not up much for this company. I was hoping for more for these guys, and my model said they were going to do a little bit better, but phone sales just really hurting them. So management is specifically saying that a slower than expected recovery in consumer-facing markets and customer volume adjustments are going to kind of push out some orders into the end of this year. Not great for the stock, and the stock suffering from that. They also talked about an AI expansion that they did by acquiring a company called MIPS, where they're going to have some edge AI products, which is not the most cutting edge chips in the world, but chips that is right in the wheelhouse of Globalfoundries and could be good business for them going forward. But in the near term, 40% of revenues from smartphones, not great because smartphone sales aren't great. Comms and data centers, sure, 10%, that's great. IoT not doing great at 18%. Automotive, well, let's get into it. So smart mobile devices down 10% on a year-over-year basis, down to $683 million in a quarter. People just aren't buying phones as much, and lower ASPs are more attractive to phone buyers, the customers of Globalfoundries. And so as a result, they had to back away from some of the deals. They had these deals that investors thought, well, this is great. They've got a guaranteed minimum. They're underutilization payments. So even if their customers weren't using them, they were going to get paid. They backed away from those deals. They renegotiated those deals. Now they have these share of wallet deals that they were bragging about on the conference call, but they're going to get 50% of some key contracts. But in the short term, it's going to hurt their average selling prices, even though they think it's going to help their long-term wafer revenues. I mentioned IoT up just 2%. Automotive actually was strong in the quarter, up 22% on a year-over-year basis. Automotive demand rising, up 36% on a year-over-year basis, 22% of revenues, because their microcontrollers, their radar processors, their battery management ICs, all really important for this company's automotive business, because more and more chips going into cars is good for this company. So how did the market react? The market just didn't like these numbers, down 11% in trading after these numbers came out in the wee hours of the morning. And indeed, the stock now for the year, down 22%. Now, they talked about Photonix. I love me some Photonix. I love me some lasers. They talk about co-packaged optics. We love co-packaged optics, but that's a business that someday in the future, co-packaged optics don't really exist anyway. But they say it's going to do $200 million in business next year. Believe it when we start. Sorry, this year we'll see it. We'll believe it when we see it. But Photonix is going to be so important for these guys. But it was also interesting to see this new CEO Tim Breen talking about weakness that they see in the consumer.
I mean, if you take a big step back, right? If you look at the last 3 years, really 23, 2025, we've been closely monitoring inventory as a kind of long-term predictor of health of where we are in the cycle. And obviously that's been a long duration, but inventories have in all sectors come down materially. It hasn't always been smooth. And if you look at some of our customers reporting in Q2, there are some others still to report, but you saw actually some small, I say modest upticks in inventory. That tells you something about kind of demand dynamic. And again, I'd say particularly in the consumer focused segments where there has been more demand uncertainty, as we commented. I think overall we continue to see the trajectory of inventories normalizing. And actually we hear from customers that downstream of them, inventories could even be too low, right? And they see some pockets where there could be some tightness that could lead to some demand spikes in the future. So we continue to monitor this closely. It's difficult to call, but we see we're coming to the end of that inventory digestion long period over the last couple of years.
So inventory digestion over a long period of time, It's not what you want to hear from a company that doesn't like to see inventory in its customers, what company does. All right, but what's your big drill down earnings takeaway? What's the one number that tells you a whole lot? So, Globalfoundries' disappointing Q2 earnings wasn't really in the numbers of $1.688 billion in revenues, but the 3% growth rate hurt by the sale of wafers that end up as chips in phones. Just not happening for this company here. And the number that tells you a whole lot, the drill down earnings bite, is indeed negative 10%. The smart mobile devices, their biggest segment, down 10% on a year-over-year basis. Not great for Globalfoundries, even as some other parts of their businesses are doing quite well, especially automotive. But you can't get over a slow smartphone business at Globalfoundries. All right, thanks for checking out Drill Down Earnings. Subscribe to us at Cory TV on X, as well as on @DrillDownPod on Instagram, TikTok, and of course on YouTube.